What's up, YouTube? What's up, Discord? Free from it all here. I'm going to be talking about Webull, okay? Don't get too excited with this chart. This was a IPO de-SPAC type situation, 10 bucks. That's like the standard. They all do that, 10 bucks. Immediately jumped to 80. And then people realized, wait a minute, this isn't Robinhood. Okay, Robinhood has over 25 million funded accounts. It already has crypto, right? So it has a lot of crypto like Bitcoin and Ethereum and stuff in custody, meaning like they have to keep it on their books because it's not theirs. It's the people's. This doesn't even have that. It announced that it's going to have that, so it started popping yesterday in the after hours, right? But really what you want to be looking at is way down here, okay? This price, 15 bucks and then 18 bucks here. Hold on, we'll go back here. So it borderline went to this. Is what we were talking about yesterday, the little tweezers here. It borderline went to this today, all in a single day. Obviously, it was Friday, options expiry, following some good news. And they knew that they were going to hit everybody with this dilution bullshit. So the market makers pumped this. There's no doubt about it. They pumped it to drive FOMO, to bring liquidity in with retail buying. Retail got duped here today, big time, okay? Don't let anybody tell you otherwise. This represents a 19% stock dilution. I'm going to explain it, but I do think this overall the stock is fairly secure. Unfortunately, in the near term, especially if you bought over like 13 bucks, you're probably going to be in for a little bit of a hurt next week, myself included, because I'm going to be owning shares at $14.61, and I'll explain that as well. So anyways, you got this beautiful 3 white knight formation here with a massive blow up top. Fibonacci retracement would have put it back to like 16 bucks anyways. What happened? Well, here they put out news that Webull would file for a share issuance. Okay, it's a previous arrangement. Okay, let me pull this up. I got a Grok conversation for you. So it's a previous arrangement with Yorkville Advisors. Okay, now so basically, when this thing came out, they bought 159,000 shares. Okay, that's pretty easy to see and read. They bought 159,000 shares. And they said, like, they got the option to buy 75 million more. When they originally committed, it was like 1256, right? It's been below that for a while. If they want to exercise this, okay, they get a 2.5% discount on all that. Okay, so put yourselves in their shoes. This is like, pretend you're them, right? Webull says, hey, do you want to buy 1,000 shares at a 2.5% discount from whatever they're trading at? We're getting back into crypto, and you can see retail is FOMOing into this hard. And everybody is comparing us to Robinhood, even though we're like nowhere near levels of Robinhood, okay? But people are smooth-brained for the most part and don't do much due diligence or research. The average person. Thankfully, I'm here and I do it for you, and other people do it for you, and then bring it to you in this sort of medium. So, anyways, are you going to pay 17 or 20 or 25? Like, are you going to wait for it to run before you exercise 75.2 million shares if you're really interested in it, and you could go, whoa, okay, well, we could buy this now. It's going to dilute ourselves as well. Okay, it's going to dilute their own shares when they buy it because they're buying into the Webull float. But maybe Robinhood goes to 25, 30. Robinhood, if they get it at 15 and it goes to 30, they've made 100%. It's pretty realistic when you go and you look at a chart, and you saw that before it was 80. You know, it was only for 80 for one day, but it is what it is, right? So it explains to you this is not immediate dilution, but the fact that to get the 75 million shares, they will still have to issue the 75 million shares. They have up to 3 years. They're not going to wait 3 years. They're going to spend this weekend, after all this FOMO, they're going to spend this weekend raising the capital, getting the money going, talking. They're going to be on the phones all weekend, hitting up clients, hitting up investment partners and other brokers and firms and stuff they're partnering with, and they're going to get the capital that they require. Let's call it at $10 a share, that's $750 million. So at 15 a share, that's $125 million that they're going to need to come up with. Thankfully for them, the announcement dumped the stock a full $2.50, almost $3.10. It's back to 15 and change, but I wouldn't expect that to hold. On Monday, you're going to see cascading stop losses. People will have set stop losses that bought the stock. You buy stock here, you're probably setting a stop loss if you're trading with it, right? And those are going to trigger. And the ones that are below them are going to trigger as their stock sells ahead of them, like the people's market open. This thing is taking a dip. It's not going to pump. It's not going to rally off of a dilution. You're out of your fucking mind if you think it's going to rally on a dilution. And it's simple math, okay? It's very simple math. You take, oh, 1 second here. I got the wrong, here we go. You take the Webull float. Simple math. If anybody's ever been in a math class, 400 to 1 million shares, call it 402, put 75 over it, because that's what's available, right? It's going to add to that, right? So we currently 75 million shares over 402. We're talking an 18.7% dilution. So I just rounded to 9. Okay. You can I'll tell you how to work with that number. But then the float goes from 402 to 477. 477 million shares. It's 100% a dilution, guys. It's going to dilute. Anyone saying people can't read or whatever, the typical moron on StockTwits that doesn't actually do any due diligence or know what the hell they're talking about, that's what they're going to say to you because they're trying to get you to FOMO in. It's okay to buy the stock. I'm good. Like I said, I'm owning 500 shares at 1440. What the hell was it? 15 puts. I sold 15 puts at close for 39 cents each. So 1461. If it's above 1461, I'm okay. If it's way back down to 14 or something, I guess I'm losing a little bit of money on Monday or next week. It's fine because I am long-term bullish on this play. I always have been. 5 million active users that are trading an alternative to Robinhood. That's pretty good. Getting into the crypto space, that's excellent. It's free money for them. So if the stock gets diluted 19%, what happens? Well, I'm not going to say, okay, well, you take 19% off the close. Well, no, the close was irrational. It was trying to push options executions. The options closed like these were like 800-900%, 1,000% into close. I would say you would take 19% off of the basically what it opened at. Okay, so we go here and we look. Yeah, it opened around 14.5. But maybe we could be a little generous and say 15. Okay, so $15. What's 19% of that? 0.81, right? Minus 19. So if this thing could drop, should drop to like $12. So if it drops that low, we're in for some hurt here. Everybody is. That's going to suck. But if you pull this out and you look at the 1 year, the 1 day, we have some support. Okay, it doesn't have a 200 EMA yet, but we have some support around 13 and 30. There's also what's kind of a soft support here at 1465, which would be this candle. It's going to give up this whole candle. I'm almost positive. I would be surprised if it doesn't. If it doesn't, excellent. Like I said, I want it to stay above that, but in good conscience, I can't say that it won't. Next, there's like a third option, be about halfway through this bar, right? You'll see it all the time. Like that's what these tweezers were back here, right? You see the whole bar fill. Oh, where did we go here? Sorry. Here we go, right? This is what I'm talking about. This is kind of like probably what we're looking at, unfortunately, for next week and maybe the week ahead, is tweezers where we give back that nice big fat juicy candle. We just give it all back, and then we're stuck somewhere in this mother candle if we're lucky. We don't want to see that. And I think, frankly, I think retail is on this now. Now there's a whole bunch of retail bag holders. So they did line this up nicely to sucker people into holding long, which will stabilize the stock. So like I said, I do think we've got a nice soft support at 1466. The math says like it's in the low 12s, but we do have an EMA here, right? I don't know if we have the 200 EMA. No, we don't have it at all. There's just none, unfortunately, on any time frame but the hourly. So that's, and even there, you can see on the hourly, right? If we're, the algos right away, guys, they took it to 48 EMA right away, within seconds. That's not retail trading. Most of retail can't even trade in the after hours. That's real money, big money firms. They dumped the hell out of this right there. Probably going to retest that 14 low. We do have nice support at 13 though, which is way better than low 12s. That would represent, I mean, like I said, I would have 500 shares. That would represent almost $1,000 loss for me. I don't really want that. I'm definitely going to be setting up buys myself for like 13.13, right? 13.13. Do I want any in the 14s? I don't know. I might just sell some more puts on Monday, seeing how this reacts, expecting it to pop, right? That's how I protect myself from FOMO and buying in, right? At the end of the day here, I had advised in my Discord that I was going to be shorting the final push, and that was like ultra successful, right? I got out here. This was nothing. I got scraps. All this happened afterwards, right? Because we're day traders, we're active traders. We do have some longs, but it's not a lot, right? Like my last videos were NVTS. Right now in my Discord, I'm holding Srfm. That had a nice healthy pullback. Palantir owns 19% of Srfm. I mean, yeah, that's a double top. That's as clear as day as you can get. Double top. It's below its support. If we look on the 1 year, 1 day, right? It still has a lot of room to downside, but I'm literally going to double up. If it comes down anywhere around here, 413, double up, comes to 360, triple up. I will dollar cost average down on this if need be. I'd rather dollar cost average up. But you know, this is when we're talking about, this is when I'm looking at all three of these, right? All three of these are basically my babies that I've been talking about for the last month. I didn't have almost any videos on Srfm, but I had alerted my Discord members something at like 3 and change, I want to say. Okay? It went to like 9 something, 10 almost, I think. I think it went to 10. Yeah, 991. Yeah, it was up there. Alerted NVTS at $4 and like 3 cents or some shit. That went to 9 as well. I think this one could go much higher. We'll have to see. There was a lot of insider selling that went against it. But again, Webull, I am long-term bullish on basically all three of these. There's just too much. This is NVIDIA backed. I can't even type with this. You got to use your mouse here. This is NVIDIA backed. This is Palantir backed. PLTR, 19% investment. They need this for the Rubin stack. Okay, Rubin stack, do some DD, check my old videos, and then this is Webull. This is just a nice trading platform that's getting into crypto, right? What's really not to like about those? And the price point is excellent for people. The floats are pretty good. This one's a small float. This one's kind of mid-size, and this one's, you know, it's a larger float. It's not super attractive about Webull, but I just think it's a nice stock that people would gladly put in their portfolio, tuck away, and not really care about. Having options on Webull is positive. There's no options on Srfm, which kind of is sucks. Once they get the options going, that's when you can really get a lot more volume on the stock and on the options chain. So hopefully it gets some of that going. But yeah, be careful with Webull. Be careful listening to what people out there are saying that are basically just lazy or trying to protect their immediate loss that they just suffered. Because I can guarantee you right now, okay, I can guarantee you, people had FOMO'd into this into close. And all they were saying is 20, 20, 20, 20. This was a setup, a full-blown setup. There's no way that they knew this was going to come out. They knew this news was going to happen. And then, rather than alert us middle of the day or maybe at the start of the market, nah, they saved it for Friday close weekend. People have already gone home. They're stuck in rush hour traffic. They can't react. I mean, the timing is very typical for this kind of bullshit. For bull. Webull, bullshit. But yeah, that's what I got for you guys. If you want to protect yourself from getting FOMO in a situation like this, join this Discord, right? The link is below. The link is pinned in the comments, in the description as well. And then you would kind of be able to capitalize on strategies like I said. I sold 15 puts at the market close. I sold some for about 35 cents and some for about 45 cents. So my average about 39 cents. Well, what does that even mean? Because you probably don't know, or you might not know. I shouldn't assume, but you might not know what selling a put means. Every time you hear the word put, you probably think a short seller. Selling a put is bullish. It means that I expect the stock to go up. So I want to get some free money while it goes up, while assuming less risk. Buying the stock at 1722 after a massive pump of about 20% is kind of scary and reckless, right? Selling a put at 15 means the stock has to fall $2.20 for me to have to buy the stock at 15. Okay, so I get to buy it at 15. Excellent. But beyond that, I'm getting the 38 cents, which at close it was 44, as you can see. It's 44 cents. Okay, so meaning if you did this like right at 359, okay, if you did this at 358, 359, sell to open, you got 44 cents, right? So all you do is you literally go $15 minus 44 cents. Your break even is $14.56. That's break even. You haven't lost 1 penny. You haven't made 1 penny, right? The thing with this is it limits your upside. So if the stock was to go up next week or was to stay above 15, I don't make anything more than 44 cents per contract. Sorry, per stock, per share. So 44 cents times 100, these represent 100 options. 100 shares. 44 cents times 100 is $44. You just move the decimal. It's like fucking, if it says 29, it's 29 bucks. If it says $1.17, it's 117. It's very simple math. It's times 100. So $44, okay, and I sold 5. So I've got about 200 bucks out of that, right? 220 bucks, a little bit of fees, like $10 of fees. Okay, so I made about $210 in my pocket today. Not next week, not when I hit the sell, but like if I were to hold this stock for 4 months, I don't make any profit until I hit sell. I sell that put, I got 210 in my account right now. Well, how did I get that though? I had to set aside $15 a share times 500 shares, right? I had to set aside 7,500. Webull trades at a short margin requirement of 250% because it's highly volatile, as you can see. So I actually had to set aside 18,750 to make that 210. I'm not giving them that. It's part of my account or my margin, right? But cash, you get a 300% margin on it. So it kind of evens out. Like if you have 10 grand cash in a margin account, you have $30,000 buying potential. That's the beauty of margin. You get your 25K account set up, you actually have access to $75,000 of stock, and some stock trades at like 30%. like an Nvidia, right? An Nvidia trades at 30%. And I'll just show you what that looks like so you can tell what I'm talking about here. These might be concepts you're not familiar with. That's the beauty of being in a Discord like mine. I'm an advanced trader who's been doing this for over 20 years. Right? I made over 2 million on AMC. Didn't get to keep 2 million because I didn't sell, but you know, got in on Tesla in the low 700s, rode it to 3,500. It's subsequently split like 3 times since then. It's actually trading at $15,000 right now. Tesla is not trading at $329. Tesla is trading at about $15,000 right now per share. Okay? Apple isn't like 100 or 200 bucks, guys. Apple is like $25,000 as well. So, anyway, here is margin requirements, right? And a borrow rate. Okay, so if you were to short this stock, it costs you 24% annually, divided by 365. If you were to short Nvidia, for example, because you're like, holy shit, it's over $4 trillion and it was only $2 trillion 3 weeks ago, it's probably a good fucking short. You'd probably be right, and you wouldn't pay anything to short it at all, to borrow the stock. You pay nothing. You know, when AMC and GameStop were going, this was 1,000%. It was 1,000%. Your credit card is 20. So to short Webull right now costs more than a credit card. So there's not going to be a lot of people wanting to short Webull. Shorting Nvidia is free. There's going to be a lot of shorts on that. 30% margin requirement though versus 250. You get a lot. Your money goes a lot further on an Nvidia stock than it does a Webull stock. Okay, that's something you have to consider when you're doing options or when you're in margin. Okay. Subsequently, if you got hurt, maybe you bought Webull, maybe you FOMO'd in at 1650. Okay, I'm going to tell you how to get a little bit extra out of it on Monday or Tuesday or Wednesday before like next Friday, right? So you're not feeling so much pain. Okay, it's what is it at right now? Webull 115. Webull is at 1560. Okay, so it's kind of stuck right now in between 48 EMA and 13 EMA on the 15. 1560. Let's say you FOMO'd in at 16 and change. Now, I don't know what your goals are. Maybe you were hoping to hold to 20, right? You can go down and look at the 20 chain and see what it's paying. It's actually this options chain is paying quite it's rewarding you handsomely. Right? These are not going to be the numbers on Monday because these are the numbers based on $17.22. Not going to be the numbers based on 1560. 1560 is probably looking more like this, 50 cents. But you could basically get 50 cents a share. You're gonna go onto the options chain on Monday. If you have, for every 100 shares you have, if you have say 300 shares, that could be 3 contracts, right? You don't need to just hold the stock. You can go open up a $20, right? You'll right click, and instead of buying the call, you'll sell it to somebody else, and your shares will be the collateral. That's what's called a covered call. So rather than needing money in the account, you'll just already have the shares you already have, and the collateral will be the shares. So you could put in 20. Maybe you'll get 35 cents a share back, 25 cents. Some cents is better than no cents. The odds of this thing rallying next week over 20, after basically saying we're going to screw you in the A for 19% of the whole float, are extremely small, if at all. If we finish next week above $17.22, I will be shocked. Okay, if we finish it even above 16, probably I would be shocked. So and it gets better the closer you go, right? So if let's say you bought at 16, I said, you could sell at 16. You can sell at 15 if you want, but there's really no point in going in the money when you're selling calls. There's not a lot of point unless you're looking like deeper away, and even that it's just pointless, right? You could go to 16, you'll get the absolute maximum. You might get like so at close it was what? It was $17 at close. It was paying $1.34 at close. That means you could have bought 100 shares for $17 at close, like 1 minute before close, 100 shares for 17, opened one contract, immediately got paid $134. Then next Friday, if the stock fell 17 minus 134. If the stock fell to 1566, you didn't lose a single penny. Okay, if the stock stayed at 17, you gave your shares away, and you get to keep. You're keeping the money no matter what. But you've now made $134 where other people didn't make shit because the stock is still 17. If the stock went from 17 to 1834, okay, you're the same as everybody else because you sold a 17 covered call for $1.34 right away, right? And everybody else just held their stock and they didn't sell a call, but the stock ended the week at 1834. Everybody's even. So you can see how dealing with the options gives you a supreme advantage over everybody else. The only time you would lose in that scenario, you wouldn't lose, you'd lose out, would be if it goes above 1834. Then that would be a little bit of missed opportunity for you, because like if it went to 20, you'd be missing out on $1.66 per share, 166 bucks on your 100 shares. If you had ever intended to hold it until 20 anyways, if you had the willpower to hold. Sometimes people can't even hold for that long. They see it's all fluctuating. Maybe they got spooked because of a dilution event, right? That's going to spook people away from the stock entirely. I'm telling you that right now. But in all that, I gave you 4 scenarios, and you were only the loser in one, meaning you 75% of the time you were a winner, right? If the stock falls, you're a winner because you are making money holding your stock, getting paid to hold your stock. That's what these covered calls are. This is someone else paying you to hold the stock, and they are buying the opportunity. You know, if it goes to 30, they did well. If they can't make $1.34 on it, they lose money, right? So you make money if it falls, you make money if it goes if it just closes exactly what it was today. Friday it was 17 today. July 25, it's 17. You're ahead of everybody else. So that's 2 scenarios you're ahead. If it goes up to 1834, you're still a winner because you sold for 17 plus $1.34, that's 1834. Stock goes all the way to 1834, you're a winner. Stock goes over 1834, you're a loser. 3-1, man. 3-1. You got to learn this stuff, guys. If we knew this when AMC and GameStop was going, it would have been a game changer because you've been able to roll all that money into your own stocks, right? I didn't know that then. That was 5 years ago. You would have been able to roll that free money into your stock. Just like I said, like Webull, guys, it's $15.59, right? $15.59. You buy 100 shares at 17. You sell one covered call for $1.34. Hell, you go to 18. Give yourself $1 upside. Take $1.10, right? $1.10 is $110 in your pocket. How many shares of Webull is that? At 17 when it was at close. That's another free 6.5 shares of Webull, if you want to look at it that way. Or $110 is of Srfm is $5.30. It's 21 shares of Srfm. $5.39 now. I'm up on that. So you know what I'm saying? You're getting paid. It's like a supreme dividend or something. You know, it's excellent. You can do it every week. You can do it monthly. Some stocks are weekly. Some stocks are monthly. This one's weekly, right? I was looking at a different one, MOH. I believe that's monthly. Let me double check that. Yeah, so MOH is like a monthly stock. Look at this bad boy. Imagine holding this. It's July 1st. It's July 1st. It's $312. Some other company reports it's bad. The stock falls 25%. Falls 50% almost. Within 2 weeks, 3 weeks. 3 weeks later, you're down like, you lost thousands and thousands of dollars, right? I'm watching this one. I'm thinking I'm ready to buy it. I did a little swing on it earlier today. Thank God I got the hell out and I just took scraps. It looked like it wasn't doing well down there, so I just got the hell out. And then it proceeded to drop another, like, what did I sell? I sold at 189.60 and 190, and it went out at 182. So I'm glad I got out of it. But it's looking like a sweet buy, right? But I'm looking at the options chains. 4 weeks out, that's a lot of time. That's a lot of time to put a lot of money away. Weeklies, what are you trading time for? You're getting less return, right? These are paying $12. These are paying $1. You're getting less return, but you're only required to hold it for 5 days. Not even really 7, because the weekends don't really count for shit. They're not really factored in financially speaking. They're just sort of not counted. Kind of like motorbike insurance. If you live in a place where there's snow, your motorbike insurance, it's only for a few months. You're covered for the whole year for fire and theft and all that, but they know you're not going to be driving it in December. So they don't, like, the premium for that month is like $10 or $5. Like, it's nothing, right? And then the premium for the summer months is like $150 or whatever. And then they just tell you, well, your yearly cost is like $200, right? So that's how it's kind of, think of it like that, right? Since you're only required to hold for a week and that person is only paying you for a week, you get less return and they pay less, right? So there has to be significant price change in that time to facilitate, significant gains or losses. This is one way to protect yourselves from short-term blips, but also just to, over time, give you that little bit of extra oomph. Like, let's say you were really bullish on Webull, okay? You're really bullish, right? Webull was, again, we're just going to keep going with the close price. Webull was 17 at close, okay? You're extremely bullish. You think it's pumping, but you still want to make a little bit extra money every time, every week. So if it's at 17, you go, okay, I would sell Webull if it goes up 30%. I would sell my shares. So you go times 1.3, 17 times 1.3. So that puts you at the $22.10. $22 strike. You go to $22, boom, 58 cents, $58 in your pocket. Why just hold the stock? Just make the extra $58 for free. For every 100 shares you own, get an extra $58. What is that? Okay, well, $58 divided 1,700 is 3.4%. I'm telling you, the IV on these has to be up there. It's like 200%. Yeah. So the IV is huge, 200 and something percent. Like, that's crazy. Most slow-moving stocks, the IV is like 30%. When a stock gets really retail insane, this thing's always like 400%. That's going very high, okay? That, which is good when you're selling. It's terrible when you're buying. They're paying a huge premium to buy this shit. When you're selling, it's excellent. Okay, so you make that extra 3.4% a week. Well, guess how many weeks are in a year, guys? 52 weeks, right? Annually, you're making 177.4%. You invested $1,700, okay, because you bought 100 shares for $1,700. You're gonna have $3,016 in a year by going 30% out of the money. So you just, every week, you just move it, right? So if Webull's 17 and it only goes up 15% next week, right? 17 times 1.15, it goes to like 1950. Yours was 22. So you get to keep your shares. What's 1950? You do the 30% again, right? So the next week, so when next Friday comes, you go, okay, $25 strike now. You just keep moving the strike, saying, agreeing to give your stock away for a 30% bump in a single week, which is phenomenal, or get free money put into your account week after week after week, $58 a week, $58 a week for 52 weeks, $3,016 profit, right? Not just, and you only put in 1,700. So if you were to sell out at the end of the year, you're getting $4,700 on $1,700 invested. Whereas the normal Joe is just getting $1,700 plus whatever the stock moved. Nothing more. You're going to just get $3,000 for free. Well, my Discord's $19.99, guys. So an extra $3,016 if you did my strategy for Webull, an extra $3,016 divided by $19.99 would give you 151 months of education like this. So nearly 13 years. So you would be set until the year 2037 December, end of year 2037, because it's July. So I literally just showed you how to make free Discord till 2037, where we talk about all sorts of stocks. And like I said, I gave out Nvts at 420. It went to 9. All my videos are proof. I gave out Srfm at 3. It went to 991. Video proof. Proof in the Discord. We have a gain section. People making thousands of dollars. I actively encourage them to post there. What's going on here? Right? Percents, 800, you can't really see that. It's hard to see. $800 profit, open door tech, selling some calls, right? Buying in at 447, getting out at 510, 180% on SPY puts, quick $100 on coin puts, right? 40%, 31% here, 100%, 75%. This guy made $3,000 on Tesla calls. He makes like $2,000 a day on Tesla calls. We're all over the place, right? $81 here. Not every play is millions of dollars. This is me posting just like $150. Like, what did I have today? Wasn't anything spectacular. I wasn't making millions of dollars today. I've been playing quite light right now because we're getting into earnings and I need capital set aside. So this is what I made today on these stocks. I left over $600 on the table on Webull. And then I was in SBet. I got out for nothing, but I had short it. I had short SBet, and it got destroyed. But I had closed out way early. I closed out here at 35. I was all over. I was shorting this like nonstop the last two days, pretty much, off and on. And then it tanked. But I mean, they did a $6 billion dilution. So what they're doing, I've never seen such a fraudulently sized dilution in my whole life. Their float went up 375%. So we're sitting here talking about Webull going up 19%. This piece of shit company with only 5 people in it, it's totally fraudulent, guys. It just diluted for 375% of the float. That would be one I would avoid like the fucking plague. You like Ethereum, buy Ethereum. That's what I'm doing. You want Ethereum, you don't buy SBET. You want Bitcoin, you don't buy MSTR. You buy Bitcoin. MSTR buys 12. Every dollar you give MSTR, they only have a yield of 11 or 12%. That means 11 or 12 cents goes to Bitcoin. The rest goes to costs and paying Michael Saylor to be a rich playboy and fly around the world. That's not free, guys. Flying private jets isn't fucking free. Okay? Putting your money into SBET, their yield rate was 25 cents on the dollar. After yesterday, I don't know what it is. 1 penny? Negative a penny? I don't know, because they only bought they only bought like 200,000 Ethereums or something, or 200 million Ethereum like dollars out of the 7 billion they've even raised. Like, I don't even know. Their yield is shit. Let's put it that way. But these are the concepts and the ideas and the things that we talk about in here. That's all I'm trying to get at. So, and this is the place to help learn these things and understand these things, or just be part of a community of people who trade and think in this manner as traders, not just not just on StockTwits, buy, hold, rocket emojis, to the moon, all that old bullshit, retail garbage. Real people, adults, all ages welcome, obviously, but we are a more mature crowd. And, well, some of us. Probably not so much me. It is what it is, man. I hope you guys enjoyed all of the lessons I offered there and all the insights and potential strategies you can try to employ yourself. Let me know, try it next week. Let me know how it works in the comments, if it works for you. Maybe even if that saves you, like I said, maybe if you got in kind of high and you need to use that to kind of get yourself out. The IV on these is phenomenal. I would definitely be looking at selling some of that. So put it in the comments. Let me know. Subscribe, share the videos, and get in the Discord, guys. Free.